Good afternoon, everybody. Greg here. Let's take a look at what's going on here. So we were looking for a consolidation day today after yesterday's run. That's typically what happens after you get a wide range bar day. Just looking at the transports there. There's your wide range bar, inside day so far. And this is not what we would look for as a textbook 1, 2, 3, but it does form 1, 2, and then we'd see if it can move up on Monday. And so if it can do that, that would help the breadth improve that we spoke about pre-market this morning. And looking for these underperformers to start bringing up the rear and see if that starts to move up. And so looking at some of the ones that are in here that are performing, and that could continue to outperform next week, like Uber, which has been an institutional favorite. Has been correcting for a while, and it's got a good day today. It's not an actionable setup yet because we'd have to see today actually close. This one, more of a 1, 2, 3 that we like. We prefer, though, to have gotten in down here at minor support and the rising 20 and already in there managing it, where one that's already moved up already, what we'd like to get is a correction kind of bar where it pops down a little bit under a low and comes right back up again. So we don't want to see this come under a low because it's a wide range bar. But if it was an inside day and we got a correction bar where it traded under the inside bar's low, then that's a 1, 2, 3, 4. So let's just take a look. Some of the airlines, what a big difference, right? ALK moving in an uptrend there, gapped up today and profit taking versus Southwest, which looks like maybe it could be one of those ones that bring up the rear. But what's moving the markets today, different from yesterday, was that the Qs severely underperformed. The wide range bar that occurred in some of the other indices, this one just consolidated. It wasn't getting moving because of many of the FANG stocks, which I'll show you, take a look at here. Switch to this screen. Apple, which I mentioned this morning pre-market, to see if it could start to lift off of this major support area, and it's doing that. That's a big plus. Amazon continues to be weak, but it's nearing this unfilled gap and the rising 50 MA. So we'll be watching that to see if it turns around either today or Monday. Tesla, I mentioned, looked great. The best one, looked like it could move up. If you listen to the pre-market recording, I said buy 5 shares, buy something. And it's having a monster day today, and it's got room to continue to move higher. Look to buy a dip. Google underperforming, but it's been a big outperformer. Meta turning around. Looked like it was heading down toward the 50 and the unfilled gap. Buyer stepped in ahead of time. That's a plus. So unfilled gaps in a 50 MA is an obvious institutional point where they're going to step in. So what does that mean? What it means is they're anticipating the turn and they wanted to jump in ahead of time, and it's forming this bottoming tail bar. Another plus. Netflix, this dropped, I think it was coming down. Yeah, I see that little E there. That was on its earnings report. And here it looked like it was ready to take off. And now it's back down again. See if it holds the major support. Microsoft came back from the dead, so to speak, with this wide range bar. And it was consolidating at the bottom. And this morning it gapped up. It stalled at the top of the arm. But this is a big plus that it could move higher next week. NVIDIA, just marking time here after the gap up. So somewhat bullish consolidation at resistance. So that is a plus. So let's go back to the other screen. Look at other markets. That one. This one. Okay. So everything's Fed watch next week and options expiration. And we'll see if we get that move higher into that in anticipation of the cut. So this looks like it may go up a little bit, but maybe it's going to come down to the low. Interest rates moving down. Less inflation, maybe stagflation, at least lower interest rates for mortgages. That's a plus. We'll be seeing what this does. Transports we looked at. The Dow broke out. This is a textbook 1, 2, 3. Nice consolidation, wide range bar. It's a new all-time high. It's a resting day, was what we anticipated to happen today. And above this high next week, higher. Bullish price action. And the only thing we can think is it's going to go higher. Now, semiconductors, which got turned around from this low, they're extended short term. So NVIDIA not moving, this short term extended, probably pull back a little bit, maybe to that high, maybe to that high, and that could put a little pressure on the markets if it does. We'll see how that shapes up. Just peaking oil gapped up this today, is not doing anything. Regional banks look okay. So here's a wide range bar in a 1, 2, 3. And this is more indicative of this market of, I've used the analogy walking on eggshells, but doesn't crack them. Where it moved up nicely, it pulls back kind of deep, tries to move up, gets sold into again, and now it's on this major support. Decent day tomorrow. If this can take out this high, I suspect it should go up. And of course, you could look at stocks within that index to see what showed relative strength, like this. Right? That moved up. It's outperforming the index. It's moved up a few days. It's a resting day. It's something that looks like it could go higher. Here's another one. It's got to break out, but it's at the top of a wide range bar. It negated the big wide range red bar. That's a plus. There's a 1, 2, 3. It's below the 50, but there's congestion up there. There's an unfilled gap. It came up to the top of that big, nasty down bar. Above that high, it should go higher. All right, MAGs with the Magnificent Seven, as they're called, that looks like they can move higher. I mentioned this morning pre-market. It is new all-time highs, and it's in alignment with the bias of the potential blow-off, that could continue to move up. There's other things that are moving up like this, making new highs. It's extended. So look, we're looking primarily for things, not this. It's coming down to major support, but very erratic, volatile. It's been over the years. We'd like to find things that look like they could be getting started. This is a better one for intraday traders. It's bottomed out here, and I'll show you. This is a 65-minute chart. So you can see the bottoming action here, and it's got room to move up. It's consolidating, so that gives us a bias. By the way, sign up for my presentations. There's one on Monday. I'm speaking at 11 o'clock. An email is going out. You can get registered for that if you want the recording, which will be well worth your time to at least sign up to get the recording, which is what I'll be covering. So above here, at least from an intraday trading point of view, I like it. From a swing trading point of view, I'm not loving it, but it could move higher. But from a day trading point of view, I think it's a great setup. We looked at the Qs moving up, and then I was looking at this just before I started setting up there with an intraday setup. Look at the pivot and retest and moving up there. So little setup there on the 5-minute for intraday traders. It's already triggered and it's moving up, but that looks good. Back to the daily. So this was a semiconductor. Why is semiconductors extended? Because LRCX made a monster move. So this moving up, NVIDIA not doing anything, so there's some semiconductors that really brought up the rear that were underperformers. Tesla we looked at, and ARM, this is, I think it's an ADR, it's an overseas setup, but yeah, so that's coming in today. Some other things, gold is consolidating, and healthcare providers. Oh, XLV, which, it's having a little bit of a hiccup here today, but overall, you got a big bottom, and looking at the 5-minute, you can see there have been buyers on the dip. I mentioned this in the advisory letter as this was forming. It looked like it was going lower down to here. And one of the concepts that we talk about in the course is creating support. So something that looked as ugly as this, you look to the left and you say, well, it's likely to go down here. But once it forms a pivot, like this did, it created support. That doesn't mean it can't go down, but then it formed another pivot. And so our anticipation is there's going to be buyers at that area, and there was. It's a bottoming stock. And so a wide range bar up. Institutions are getting more aggressive for this underperformer. So this week looks okay. Forget the moving averages. This is a weekly chart. As we go back to the daily, you can see yesterday it cleared the 200 MA. Today's a resting day. I like it. So far so good. Things don't always go straight up, but this is just consolidating. You got to sit through it. And yeah, overall, there's things that look amazing and they're short-term extended. I suspect they'll consolidate a bit, and those that are underperformers will start to outperform. Maybe oil does. Um, yeah, solar pulling back to the rising 50. Not an attractive pattern as of yet. Insurers. Doesn't cost any money to set an alert. Set an alert up there. See if it gets going. Look at the bottoming pattern. That's kind of a pseudo head and shoulders type of a bottom. The right shoulder, it's not curved, but who cares? It's flat. If it can take out these highs, that says it's going to go higher. So we'll see how it shapes up. We'll see what happens after the weekend and what happens next week. But markets are looking fantastic, like they can go higher. And our concern is, as it goes higher, our market internals are going to align bearishly, and for that to coincide with an options expiration and a lowering of interest rates would set up a corrective kind of situation. Not a collapse, not a crash, but some kind of correction. So we'll see how it unfolds. As always, if you have questions, email us, Greg and Dan at Master Trader.